Hey, what's up, guys? Houston here. Look, if you're looking for a small business loan, okay, I'm gonna show you some of the best places you possibly can look to get a business loan. All right, now here's the thing about it: understanding when getting a business loan, one of the top things is that what is your type of business? So basically, I'm asking you, what is your NAICS code, right? And so, again, with your NAICS code, if you have a high risk NAICS code, then this will make it more challenging for you to get funding. Okay. Now, I know many people that want to get in the real estate game, they want to be real estate gurus and stuff like that. However, like I tell you guys, that's one of the biggest red flags for any lender because it looks as if you want to gamble with their money. Okay, so that's just one of them. I do have a list of bad NAICS codes. If you need help trying to figure out the best NAICS code, you can click the link in the description and schedule a one-on-one consultation for that. All right, so that's number one. Number two is, are you a startup or do you already have revenue? Okay, do you have revenue in the business? Now, this is going to make a difference as well, especially like if you have bad credit, okay? If you have bad credit and you have revenue in the business, there's plenty of lenders that look at the revenue, and we're going to talk about some of those in a minute, that actually just look at the revenue instead of focusing on your personal credit, okay? Even when you have bad credit. Now, if you're a startup and you just got this idea or whatever, again, there are a few solutions for you as well. Now, number three is the business structure, okay? Now, here's the thing about it. Most people, when they start out, they may have an LLC, right? And the reason people start with an LLC is because they may be working a job, they go to a CPA or attorney, and so that CPA attorney said, oh, you're trying to avoid taxes. And because they put you in this structure, they're not looking at you as a growth company. They're not looking at you trying to raise capital. They're only looking at you trying to avoid paying taxes to the IRS, okay? And because of that, it makes it more challenging for people to actually raise capital. Now, when you have bad credit, one of the things that you can do to help yourself, if you have bad credit, if you're able to add on somebody that you trust and that's comfortable with your business model, if you add them on to the company, then they can apply for like different loans and credit cards on the behalf of the company as well. But just keep in mind, with an LLC, everybody that's on that LLC, they're going to pull their credit as well. So if you're an individual that's recently filed bankruptcy, this may not be a good gesture for you. Okay, so you just have to keep that in mind. All right, so that's number. Now, here's the thing about it. When you have bad credit, all right, there's three types of lenders in the market for you. All right, you have a CDFI. That's a community development financial institute. Okay, they focus on people that are in high risk development areas that have low credit scores and stuff like that. Okay, so you have that one. Then you also have micro loans. All right, usually like micro loans, you can't expect a whole lot. Okay, it's just a minimum amount of money that they're going to give you and stuff like that. All right, and I'm going to explain that more in a minute. All right, then you have fintech companies. Okay, so with your fintech companies, again, fintech companies, they're usually analyzing the business model. What's the revenue in it? They're not focused on your credit score and things of that nature. All right, so that's the reason why that I'm telling you in terms of like the structure, or if it's a startup or revenue and stuff like that, that's what the fintechs are trying to figure out. All right, now here's the thing about it. Why do you even need business funding? Well, this is what the banks are going to ask you, and you need to be prepared for this. All right, especially if you go to a bank or whatever. But most of the time, you may need business funding for marketing. Okay, now Here's the thing about it. There's 3 reasons why, but I want to talk about the marketing aspect of it. All right. And this is going to help a lot of you guys out. A lot of you guys may be trying to go into a certain industry, like you're trying to do like a retail, online retail or something like that, right? So I always tell people, look, if you're doing any type of online retail, and this can go for offline, but most of the time I tell you, find out the big dogs. Find out who's the big dogs in your industry. So if you're selling perfumes, you're selling clothes, depends, software, whatever. Find out who are those big dogs in those industries, right? And then what you want to do, you want to register you a business and stuff, and you want to learn how to become an affiliate marketer for those companies. Now, the reason is because when you become affiliate marketer for those companies, they have all the marketing dollars. They're already in the market. People are already familiar with their product and stuff like that, right? And you have a new product you're trying to push into the market, but you don't have an audience. This is the number one reason why most businesses fail. It isn't because of the money. It's because they do not have a market, or they don't know how to get the market shares, all right? And because of that, that's the reason most restaurants go out of business. Many businesses go under because, again, they don't know how to get a customer. It has nothing to do with money, all right? However, if you learn this, and then, like I said, you're trying to go out in the market, finding the big dogs and stuff like that, then what it is you set it up. Like, say that you have an online business, just for an example, okay? So you're marketing their product. This is their product. Okay, just say that's your competition, right? Now you're going to become an affiliate of theirs, all right? So you become an affiliate of theirs. Now, with their product, this is their product, okay? You're going to push that over to a landing page, right? Now, the reason you want to do this, actually, I have a full course that teaches you this if you want to be invested in it. But the thing about it, by you actually taking their product, you're marketing their product, you're pushing it over to a landing page. Now you're going to get their name and their email, right? Because they're interested in their product. Now, the reason I'm sharing this with you is because the next step, they're going to go over to your competition's page to invest in their product. So when they go here, they're going to buy that product. The competition is going to pay you. So that competition is going to pay you. And so this here money can go into your business checking account. All right. And so it'll actually show proof of revenue coming in the business. This is going to help build up your business credit. Right. And so by building up your business credit, now by you showing actual proof of revenue coming in, this will support you. Plus, with that email list you have, now you can introduce them to your products and stuff like that. That's one of the easiest ways for you to actually get into the market and making money at the same time, so that your overhead is not as expensive, okay? Now, I know some of you all may be starting out a nursing home or something like that or whatever, and I understand that, but I'm just giving you an idea of why so many people have a challenge getting staying in business. It's not because of money, it's because they don't know how to get a customer. All right. Now, number 2, in terms of what you need money for, is expansion, right? So I may have misspelled that, but in terms of expansion, you may have a store, okay? Or you may decide you want to start another business or whatever, and you need capital for that or whatever. So you want to let the financial institution know why. So you need to let them know that you're actually expanding your business. And then the third thing is, of course, payroll, you know. Now, here's the thing about it with payroll. I continue to tell people, we actually offer a service where we give you up to 4 months of free payroll and pay stubs once you sign up. Plus, we give you a one-on-one consultation. Now, if you are interested in that, click the link in the description. However, here's the thing about it with payroll. If you have payroll set up, even if you have bad credit, this is what most of your fintech companies will take a look at to be able to help you qualify for funding, okay? Now, like I said, we offer a free service giving you up to 4 months of free payroll and pay stubs for that. So type payroll below and I'll send you over the link for that, all right? Now, that being said, let's talk about some of the lenders, all right? So you have Fair Figure, okay? Now, here's the thing about it with Fair Figure. You can have bad credit, all right? Now, in terms of, they will give you a loan as long as you are revenue-based and you're making a minimum of $2,500 a month, they will give you a loan on the bad credit. Now, here's the thing about it with Fair Figure. Fair Figure is like NAV, in which I'll speak about them in a minute, because with Fair Figure, they help you monitor your business credit as well as your personal credit. And with this financial trade line as well as their membership trade line, those are two trade lines that they report to the business credit bureaus, all right? Now, let's talk about NAV, all right? Now, NAV will do the same thing at Fair Figure. However, they will offer you a charge card, even if you have bad credit, okay? So they offer you this charge card. Here's the challenge with most people. Again, when they have access to this charge card, because NAB may give you a small limit, all right, they will not use it. And because you will not use it, then there's no data for them to send back to the business credit bureaus in order to help position you so you can get more funding. So that's the reason I tell you, even if they give you a small limit on a charge card, use the card, buy gas, pay your cell phone, anything that's business related or whatever. And if you do that, okay, that information is being picked up, and as you use it, they would actually increase your line as well. Now, keep in mind, this is a charge card, so the amount you use, you would have to pay it off the following month or whatever. But at the same time, this is definitely a great resource if you're just trying to get a couple dollars to help, like with marketing or things of that nature, all right? Now, you have another company, Giggle Finance, okay? Now, they only offer up to $5,000, okay? But here's the thing about it. When you have bad credit, okay, and this is for especially you individuals that are in the gig economy, okay, and you have bad credit, you may need to purchase tires for your vehicle. You may need to, again, may need a few dollars for marketing, or you need to pay some other expenses, registration of another vehicle or something like that or whatever. Then this probably would be a good place to start at, because again, all you have to do, qualify, be in business at least 90 days and able to show active accounts, at least 3 to 4 deposits monthly going into that account consistently for 90 days. This is what helps you qualify for them, okay? It's not focused on the credit, all right? Now, you also have Fundo, okay? Now with Fundo, they give you $10,000, right? And so with that $10,000, they do a merchant cash advance. Now, we all know with merchant cash advance, yes, the interest rate is much higher. However, they're giving you a higher dollar amount. Unfortunately, they're not available in California, New York. However, again, they're not focused on the credit, okay? So this, again, pushing you away from looking at the credit, focusing in on just what's going on. So they're on top of they're part of the gig economy as well, all right? So that's another one. Then you also have Lendeska. They have a freelance loan up to $20,000, okay? Again, not mainly focusing on the credit. I think theirs is like a 550 credit score, right? And so again, revenue based, minimum annually is $25,000 annually in order to qualify with them. Okay, I'm just giving you some examples to just show you that, hey, you do not have to have perfect credit. You do not have to have a whole lot of revenue coming in order to qualify for a business loan. But again, depends on the type of business loan, depends on what credit scoring model you use as well. So it's just certain things that happen. Now, here's the thing about it for you guys, like say that you're trying to start like a nursing home or something like that, or a car wash or laundromat. Well, here you have, I'm gonna put it up here, okay? So you can see it. Here you have sale by owner. Basically, if you can find an owner that's selling the business and you are already in that market, you may can negotiate with them to be able to let you take over the business. In agreement, you may have to offer them maybe 10 to 15% above their asking price in order to qualify. But at the same time, if you want to get in that industry and stuff like that, and you're willing to make a contract to pay them, so as revenues come in, you start paying them and stuff like that. So that way, as revenues come in, you can start paying down your debt to build up your credit and stuff. And then maybe you're able to go get a business loan, enough of a business loan to show proof, and you can go through SBA at that point. You know, if you're already in that industry and stuff, you're able to go through the SBA to see if you qualify for like maybe an express loan for like $50,000. Just depends on how much they want for the business, right? So that's a strategy you can go to in order so that, like I said, if you have bad credit, no money, sell by owner, seeing if they would be willing to give you the opportunity. All right. Now, you have a couple other places. I mentioned CDFIs, right? So your CDFIs, those are the ones, the Community Development Financial Institutes that we spoke about earlier. So you have one, it's called the People's Trust Loans, okay? So they offer for community small business loans as well. And then you have the Economic Development. They offer small business loans as well with people with challenging credit also. All right. So I hope this video helps you. If you find a value in my content and stuff like that, would you give me a like? Would you leave a comment? Please start sharing my video so that other people, if you don't mind, so that other people can be exposed to the channel, so they can possibly find resources that I share with you all to help get funding as well. All right. So if you have any other questions about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.